Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have back the CEO, Doug Dyment from Gatekeeper Systems. Gatekeeper trades on the TSX Venture Exchange under the symbol GSI and on the OTC under GKPRF. The company is currently trading at 37 cents with roughly 90 million shares outstanding or about a $33.5 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Always great to have Mr. Dyment here with us. Gatekeeper's a name that we've got a fair bit of history with and have known for a number of years. So it's always great to have you back, Doug, and get sort of the lay of the land and the latest update. But before we get into that, Doug, maybe just briefly remind everybody what Gatekeeper does.
Sure. Well, first of all, I appreciate the interest in Gatekeeper as always, Paul and Trevor, and thanks for inviting me back. So, just a high level for some of your investors that are maybe new to the story, Gatekeeper is an established emerging data company. We're focused on two core markets. One is the K-12 market with approximately 550,000 yellow school buses in North America, and the other is the transit industry, both on what we call the rubber tire, which is all the transit buses, and steel wheel, which is all the trains. And we've got an AI as part of our platform. We use AI to really try to help make decisions out at the edge with respect to our cameras looking at various data points, and we'll push that data back either to our mobile data collectors on these vehicles and trains, or in some cases we'll push it all the way back to the server and do analytics back at the server and basically make these decisions. And then our customers will they'll based on what decisions are made, they will react accordingly, right? So we've got what we call as a platform as a service, and that's a bit of a hybrid model. We're not a full SaaS model, but business model, but the platform as a service, it certainly has a lot of sticky revenue, for us. What we try to do is get our customers using our platform. We record, integrated video with GPS and other vehicle sensors, and then we'll layer on either local software applications to help them manage their data just to start with, and then we'll come in with cloud-based applications that have the ability to monetize the data in the future. So we're at a growth inflection point. I've been saying this for quite some time, although the stock market has as we all know, has done quite a correction here, lately. Revenue in 2021 fiscal was 17 million, a little bit lower than the year before. There's reasons for that. I plan to talk about here in a few minutes. And again, a compelling valuation right now at about 36 million, and the company's got about 9 million in working capital. So from a high level, that's a little bit of an introduction to the company. We've just filed, or we're in the process here of filing our financials at about 1:15 this afternoon, and that would be for Q1. So, and I encourage investors to check out our updated website. We've got a lot of activity that's been going on there. We should have our financials and MD&A and news release filed on the website at about 1:30 p.m. Pacific time, this afternoon, with financials filed 1:15 p.m. on SEDAR. So, just a little bit of highlights on the quarter. Revenue was 2.7 million, gross profit was about 1.7 million, and gross margin was up this quarter at about 64%. So we're starting to see, some of the results of our platform as a service really starting to deliver on the gross margin, which is quite positive. And And some of the highlights I want to point to that we accomplished, we really invested back into the business, invested back in our sales and marketing, both and as well as R&D. On the sales and marketing side, during the period, we recently launched, a new website. We created 5 new product solution videos, 7 new customer marketing campaigns. We invested in inventory, which has been a big challenge for anybody in this industry. And, with this chip shortage, with the global supply chain issues going on, Gatekeeper has, spent a significant amount of currency in investing in inventory to protect the company against that chip shortage. So we're happy with that. We've invested approximately, 10 million. And so we're well positioned to deliver, during a pretty tough environment. All right. And again, we continue to invest in R&D. We've got some new video solutions that we've launched. We launched a new Clarity platform, which is a really cool, cloud-based school bus operating platform. What we do is we integrate our passenger counting, and future video with payroll scheduling, and dispatch functions. So that's really the first time that we've integrated with an operating platform. And one of the reasons that we did that, quite frankly, is that I believe that, video is going to be used in the future for much more than just, safety and security. So it's becoming, more. Operators are finding more uses on the operating side. So being able to integrate, with an operating platform, and we call it Clarity. That's our brand. We're excited about that because it also layers on recurring revenue for us, which is part of our strategy, as I said earlier. We also, there's a new area of growth that we're excited about. I think I've talked to you about this before, Paul. I'm a believer in mobile assets and looking at those mobile assets being either transit buses or school buses and trying to find ways to, generate revenue from the systems that we provide, that those mobile assets, carry. So our automated lane infraction system, what it is it's basically a system that, helps transit authorities clear those transit lanes and create, more of a seamless throughput when transit buses are trying to get passengers from one point to another. And what it is it takes our sensor systems and, that are forward-looking. We're able to capture license plates. We're able to, push that evidence back to our cloud-based software application we call TIMS, which is similarly used in the school bus market. And we can issue we can manage the entire, ticketing cycle. So that's a new market that we're quite excited about. We want to be one of the leaders in that market. And just recently here, California passed legislation, that allows transit authorities to use video enforcement to issue citations of parking violations when a vehicle is parked in the bus lane. So we're starting to see, legislation start to be passed, which basically opens up, opportunities, for our automated lane infraction system, which we call ALI. So that was certainly one of the initiatives in R&D. And then we've got our ongoing maintenance align. We're starting to see, as part of our PASS platform, we're starting to see, more of our K-12 customers, moving towards wireless. And once that happens, it really starts to open up all these opportunities because now you got connected devices, out in these school buses. Wi-Fi is a great example of that. That's a new product launched where we give children, riding home to and from school the ability to connect to the internet. Obviously, when they're riding home, they have the ability to, to do their homework. So that is, that's something that we include as part of our platform as a service, with the overall goal to plant, again, as many of these mobile data collectors as we can, out in these vehicles, collect the data, and then layer on our cloud-based software applications to increase our recurring revenue. So that's a little bit of an update. on the quarter, as well as for your new investors, maybe a little bit on what we're up to here at Gatekeeper.
Doug, I went through the last handful of press releases. You guys have landed a fair number of, I'll say, smaller than sort of traditional contracts. Maybe talk to some of the contract wins and what's different about these, where you see the trends. What can you tell us about that?
Yeah, so it's interesting, because a large contract for Gatekeeper a few years ago used to be maybe $100,000 or $200,000.
Mm-hmm.
Now that's looked at as a small contract, right? But let's keep in mind that Gatekeeper's got 3,500 customers. They're not all buying at the same time.
Mm-hmm.
Right? What we're finding is that there's up to about 80% of our customers are repeat buyers. So sometimes and then we've got 20% are new customers. So what we try to do is we try to get those customers basically pregnant with our system. Mm-hmm. Sometimes it could be a small deal in a larger fleet, and that has potential to scale revenue in the future. So one of the things that I keep an eye on is how many new customers are we bringing on every quarter, every year. And if you remember, when we took on the SEPTA account, that was an account that basically got us a beachhead account in the transit industry, and we're still very strong in that in that account. They've been a little bit slow to execute on some of their initiatives to upgrade their systems like they said they were going to last year, but that's understandable given some of the COVID environment issues that are going on. But when we landed those contracts, one was approximately 12 million 5-year deal, another was about $6.3 million contract. I'm just pulling that off the top of my head, Paul, but those all of a sudden start to set almost like new conditioning environment for our investors, right? But the reality is that this business is built on a lot of customers with our traditional business, a lot of customers with smaller type orders, right? So now here's the cool thing. Our sales funnel's grown to over 140 million US. And even though that top line, in the first quarter is a little, is off of what it was, last quarter, again, the margin is up, which is positive, and the sales funnel is growing, So some of those projects in the sales funnel, they're significantly larger than any contracts we've ever landed, So that gives me, some optimism that we've got a good solid base business, that is ongoing, which, as I've said before, is more of our meat and potatoes business. And we've got some trends that are starting to happen even in that meat and potatoes business, which is increasing the revenue per bus. Mm-hmm. Which I find extremely exciting because here with minimal sales dollars, we're actually able to increase, our gross profit per customer significantly. And we're seeing, we're seeing numbers in and around, at times we could be maybe $1,000, $1,500 a bus. In some cases, that's growing up to $45,000, $5,000 a bus. And that's all part of our platform as a service strategy, right? That doesn't necessarily mean that we're not seeing, opportunity in new customers because, like I said earlier, we've really accelerated our sales and marketing plan. We've beefed up our marketing department. They're doing outbound. There's more educational videos, and I encourage our investors to go to our site and have a look at them so you have a better understanding is exactly, what our systems are capable of. And so it's even though there's some, there might be some, I would consider, maybe downturn in the stock market. I wouldn't, if I was investors, I would try to look beyond that, and focus on value plays such as Gatekeeper, maybe rather than growth. And having said that, Gatekeeper's got a sales funnel that, that could pop, at any time. I mean, our sales team, knows it, and, it's just a matter, we feel it's only a matter of time before some of these projects, before we execute on some of these projects. But there's certain things that are a little bit of outside of our control. Specifically, if you look at what's happening in the school bus market and the transit market, completely caused by COVID, there's a driver shortage, and with that driver shortage, it's caused some operational issues, which has filtered into the contracts area. And by the way, Paul, I'm not somebody to make excuses, but that is the reality. That's what we're doing, right? So it hasn't discouraged our team in any way. In fact, we're ramping up. I think it's really important in this, in this period of time to not burn cash, as a company, try to increase cash, try to keep the company profitable, while we, nurture these larger projects and, and work with our clients, both on the public transit side and the K-12 side, as they work through some real difficult times. So we think we're close, like this year will be an interesting year. As we, as there's more vaccinations that are done, of course, and, we're hearing that, that we're getting closer, right? So, to pulling out of this thing. So it's just, it's important to, to continue to invest smartly in our business, spend the money wisely, right? As we continue to nurture this sales funnel.
Yeah, clearly, certainly in the school side, we're seeing significant efforts to try to keep schools open and functioning properly. So it seems like the worst in that case is behind us. Now, you mentioned cash and that you're doing your best not to burn cash. Can you give us a sense of how much cash you've got on the balance sheet right now?
Yeah, so we're about 3.7 million in cash, working capital 9.3 million. So we are, we're healthy there. We have, as I'm pretty tight when it comes to, to financing and dilution. That's something that, we don't want to see. However, I'm always of the mindset that if there's, some events that, that take place that, that force us to do some things to, layer on, some costs such as inventory, then, we'll look at it at that time. Right. But at the moment, we're Gatekeeper. When I look at our stock price, I just think compared to when you and I met, Paul, like there is just so much more, shareholder value in our business than there ever was. And, so, we feel like we're well positioned to execute on our growth plan from a cash perspective and, in lines of credit, those sorts of things and support.
Listen, I want to remind everybody that's listening, if you've got any questions you'd like me to ask Doug, please use the chat function and we'll ask the question. Doug, obviously, clearly the last 2 years during the pandemic, it's been a challenging time for a lot of the customers you service. It's the transit industry, it's the school and school bus system. It seems like we're coming out of the sort of struggle of the last 2 years. But what other challenges do you face as a business? What sort of keeps you up at night right now running Gatekeeper?
It seems to be different, from quarter to quarter and year to year. But I think the driver shortage is something that is, that has been difficult to, to navigate or try to project. Right. That's tough because just like every business goes through, you never know when you're going to wake up one day and potentially a quarter of your workforce has COVID. So that has been extremely challenging. And this inventory thing, quite frankly, that had me, there's been some sleepless nights there, right? But we're just, I don't know, we've done a really good job of our management team of planning for this, building the relationships that we needed to build all the way up and down the supply chain. We've got that taken care of, right? So what was sleepless nights in certain quarters, we've gotten taken care of. I would say that, what is, I always, as trying to run this business, I always like to see around corners, as best I can. What's got me mostly concerned is just the timing of some of these projects that we've got in our sales funnel, right? And, because they are, depending on A, whether or not we're successful, B, you know, if we are, you know, how quickly are they going to move? You know, they could be, you know, challenging, because some of them are bigger than, you know, than we've ever seen before, right? You know, so I think that, you know, that is, you know, that's something that, you know, that our management team is always talking about. You know, we're looking at strategic partners to, you know, to present a, you know, to present a bigger entity, if you will. You know, and, you know, so that was, you know, that's certainly part of it. And I would say that's probably all of it. You know, we're in the process right now where we're looking for good people. You know, we're always looking for talent. You know, and we handpick. We've got a great vision, you know, and even though we are, you know, we've gone from, you know, in the last few years, we've gone from 7.8 million to, you know, to 13.7, I guess, to 20. We leveled off there. We did 17 last year. We would have been right on budget last year, Paul, if you know, if some of the projects that said they were gonna execute on would have executed. But, okay, you know, like I say, those are things that are outside of our control. We haven't lost them, you know, and that is likely only going to set us up, you know, for future growth. But profitability has always been something that I've focused on, because we went through, you know, years of investing in the business and not making money, and that has, you know, that can be a slippery slope to dilution pretty quickly, which I'm not in favor of. You know, so, you know, this last quarter was our 8th straight quarter of operating profit, right? You know, so, you know, the numbers that are below the line that investors should, you know, look at closely, because that operating profit is, you know, that's important, right? You know, so cash burn is I think cash burn is always something that should keep any CEO of a microcap up, right? You know, because there's always things that are, you know, that are coming at you, right? But I got to tell you, man, I'm never, every time I talk to you, you know, you can hear the excitement in my voice. But Gatekeeper is, you know, Gatekeeper, our stock has been on, you know, was on a hell of a run there for, you know, for a while as the market was hot. But we're making the right moves. You know, we're staying laser focused in our lanes, no intended, but you know, and we're offering our customers more, you know, more products, right? You know, so that's something that I've learned from, you know, in the past, and I'm not being enticed by spending money in stupid areas as far as I'm concerned right now, right? You know, we're investing in the business, and that, in my opinion, is the best way to build shareholder value, right? You know, and it's eventually going to pay, you know, big dividends as far as I'm concerned for, you know, anybody that believes our story and wants to invest.
Yeah, and Doug, you touched on one of my next questions a little bit. Now, apart from the chip shortage, everybody's heard about the struggle to get you know, chips in for any sort of electronics. But you guys, I know you do at least some assembly sort of in-house. Do you? Where's the sort of the products assembly? Where does your sort of hardware get made?
Yeah, so Gatekeeper is, you know, Gatekeeper, as you know, years ago. This is before we even got introduced, years ago, to do the full design and manufacturing right down to the, you know, the component level on the boards, you know, everything here in Canada. And as we've grown, you know, we were kind of forced because of, you know, labor cost and, you know, and things like that, to move to some OEMs that are, you know, in different areas of the world, you know. So part of our products are made, you know, assembled in Asia. We've just in the last couple of years, we've set up assembly in just outside of Philadelphia, largely due to the fact that we're really a community partner in Philadelphia. We're creating employment there, and Gatekeeper USA is, you know, is growing, you know. So we've got assembly lines, you know, down there. We provide all of the shipping services to all of our customers in the USA from the USA. In Canada, here in Abbotsford, we've still got the same building, you know, that we had years ago. So we do our assembly here. Most of the sub-assemblies are in different areas around, you know, different partners that we've got, you know, and quite frankly, you know, some of those partners are at the size needed to negotiate, with these chip manufacturers in order to get allocation during this period of time. I'll tell you right now, if we were the same company today, that we were several years ago, there's no way we would have got any type of allocation. We're just not big enough. So we need to leverage partners, in order to secure that inventory, right? So and the inventory is secured, and then sub-assemblies are done. Some of them are delivered into the US to, and we do final assembly there and final testing to meet Buy America down there. And then some are brought into Canada where we do, final assembly here and testing and software loading. My goal as a company is really to leverage our North American capability, staffing capability on the engineering side by way of developing these software applications to monetize the data, that our devices collect. That's the overall goal. So when you're doing that, you really need to partner, especially when you're providing an end-to-end solution. You really need to have your partners set up around the, in different areas around the world to provide those hardware assemblies, to build out the complete solutions, right? So some of them are Asia, some of them are, different areas. We've recently redesigned, all of our products to meet NDAA requirements, which is a requirement for FTA funding down in the US. So, again, it's really been a combination of our engineering team, coming up with the specifications, and then our partners, in various areas delivering on that specification, right? So we can't do it all ourselves. We need, assistance, and we put those partnerships in place, quite a few years ago, right? So because we've been nurturing the relationships over the years and delivering, they're as strong as they ever have been.
Now, earlier you had mentioned sort of some of the revenue breakdown that you're trying to move more into, well, you call it platform as a service. There's software as a service revenue. I've got a question that just came in here that said, when can investors expect the company to provide revenue breakdown sort of by segment, whether it's PaaS, SaaS, or sort of legacy revenue?
Yeah, that's a great question. We as far as revenue segmentation on the financial statements, I don't think you're going to see that for a while until we get to a point where we get a little bit more saturation on the recurring revenue side of things. And and there's really kind of three areas. There's service contracts, then there's software licensing type contracts, and then there's system sales, right? So I'll be getting, some guidance from obviously our CFO and our board and our auditors on, that type of reporting. But what we do is we try to educate investors on where the recurring revenue is coming from, right? So it's not necessarily, segmented, from an IFRS standpoint yet, because that causes a whole bunch of other, reporting issues, right? But, or procedures. But what we are seeing is, we're typically around, 12 or 13%, has been on the services side, more recurring revenue. Now, I want to point out this though. Investors always seem to be quite interested in software as a service model. I get that, right? I mean, but the reality is in our business, we have 80% of our customers are repeat buyers, so that is pretty darn sticky revenue, right? And when you marry that with a platform as a service strategy, it really sets a company up, to grow its recurring revenue base, right? So I think we've got a good strategy. I wouldn't want, given our type of business, Paul, I would not want to just solely be a SaaS model, and some of the reasons for that is that we would then be trying to, stuff what I would consider a round hole, or a round peg in a square hole. And what I mean by that is that, some of these customers we deal with, they've got capital funds, and, they want to spend them, and they've got a certain time to spend. So that's where our system sales are, are good, and that gives us, a good healthy top line growth, right?
Gotcha. Listen, sort of as the year starts here and we progress, what sort of catalysts or metrics do you think investors should really pay attention to sort of confirm that you guys are continuing to execute on your business plan?
Well, the obvious one is sales contracts.
Right.
We've been building this sales funnel and working on some of these projects now for quite some time. So it's time to land them, right? But again, there's just things that are outside of our control, and it doesn't, like, one of the things I would encourage investors to do is if you don't see those types of contracts that you're looking for in news releases, and believe me, I've gotten, hit over the head enough times by investors to, put more news out, right? But I will never put news out that I believe is going to, be detrimental to our business. That to me is that is a, that's just not the right thing to do, right? So that can be a little, that can be a little bit tough for investors to read, but I would say to investors, look, just, if you believe in what we're doing, just stay patient, let the company grow. We're executing on a really strong, well thought out, business plan. And, areas like the automated lane enforcement market, there's things in these cities that have to take place. There's typically ordinance that have to be passed, on the parking side of things. Sometimes there's moving violations, moving ordinances that have to be passed to allow agencies to issue citations. Some agencies are a little farther along than others. So those, some of those areas that the company has designed systems for, we see huge opportunity in the future for us. Now, we'd all like those markets to move a little faster, right? But again, those are some of the things that are outside of our control. So I would encourage investors just to, look at these news releases that we put out, that may seem like they're smaller contracts, but they're good sized contracts because there's a number of them, right? And then look for, we'll see. I mean, look for some of these maybe larger contracts that, that we feel pretty, we're pretty confident, we're going to land them. But it's just a matter of time, right? But again, through this process, one of the things I think we've done a really good job of is, compared to other microcaps, is that we have not diluted the process. We just haven't done that, and we've really, built our business using our own cash. I mean, the last financing we did, Paul, was was in 2017, where we raised about 4.2 million, and we've used that cash smartly, right? So, yeah. We are in a really good position here, to escalate the growth in this business. And if some of these contracts, if we land them, we've got the inventory in place to deliver, so it's not like we're going to have huge turnaround times, so that to me, just, I would encourage investors that this is a good buying opportunity right here, right? It's not, I mean, I don't like looking at my financial statements as an investor every month either, when you see the stock trading down around 35 or 36 cents. And by the way, let's remind ourselves that it wasn't so long ago, that we would have been happy to be at 35 or 36 cents because the stock was trading around 9 cents. So we couldn't get anybody to buy it. Yeah. But having said that, through those years, this company has built an enormous amount of shareholder value, and we're in a position, in my view, from an operations standpoint, to really scale our revenue. And now it's a matter of, hey, let's try to do what we can to get these, big fish in the boat, right? While at the same time, nurture every customer, because all of those smaller customers, 10,000, 100,000, those types of deals, they all matter, right? And
absolutely. Yeah. And you never know how, what they lead to as far as larger opportunities.
Well, it's interesting.
Yeah.
I'll just make a final comment on that. Paul, we had, analysts come in and they're looking at us, and funds are looking at us. And there was a period of time in our company where we were reliant on larger customers. We had the United States Air Force contracts, and they were big, and we didn't have enough smaller customer deals, right? So the thing I love about our company and how we built it, we've got a foundation operationally where we can deal with thousands of customers, and that makes dealing with the large customers a lot easier. So we're in a good position, right? We can organically, and when the time's right, we're going to want to layer on some acquisitions.
Listen, Doug, I've got a question from someone here. It's a bit long-winded, but I'll bear with me and as I ask it here. So when the company shares news releases such as Gatekeeper announces student protector contract in New Jersey for 72 school buses, how can investors think about contract value since it's not disclosed in there? Now, earlier you had mentioned that you're starting to see revenue per bus of, I think it was 1,000 to 1,500 per bus. How do we best get a sense of when you add a bus to your system, what kind of revenue is generated annually?
Yeah, so there's a number of ways that the student protector is an overall system, that collects these stop arm violations out at the edge, and then we'll record those. And if a school district wants to engage our TIMS application, which really comes along with a citation management system, then we're happy to do that. But what we see is that the student protector platform, it's usually the first thing that gets installed. And some of them are not, they don't necessarily, they're not ready for the auto ticketing and the software auto tickets, right? So for, say, that New Jersey deal, that would be a seed planted, a full system solution on those buses. And you may see another announcement in the future where we come in with our auto ticketing, side of things. So that's one side of it. Sometimes you may see an announcement where it's an end-to-end solution where we're actually managing, the student protector program with TIMS and sharing in revenue. But in some situations, you'll get, like in New Jersey, you'll get a seed, I call it a seed planted, and then the platform as a service strategy is to continue to sell more services to that customer, right? So you might see us layer on Clarity as an example, and that would be Clarity is sold as a per dollar per month per bus, business model, right? So it's got lower revenue, but it's got, it's typically got, healthy margin, right? Because it's more software related. So, so I guess that was a long-winded question, but it was a good one, right? And hopefully I answered it appropriately.
I think you did. Listen, I think we've covered a great piece of the update here. As always, what we like to do is give you an opportunity to sort of just end with a parting message or a key takeaway. Like really today, what would you like to make sure everybody walks away knowing about Gatekeeper?
I just want to remind people that, Gatekeeper is a data company, right? We've got over 40,000 mobile data collectors now out in school bus applications and transit applications and a few other applications. And all of those are wirelessly connected. And we're starting to drive this platform as a service, right? To increase our revenue per bus and per vehicle while decreasing or holding flat our operational costs. And that's really what's, getting us, profitable. You'll see in this first quarter that, the top line was off a little bit, but that was in direct relation. Like we were only 2 or 3 projects away, from having, knocking that quarter out of the park, by the way, right? And that is a direct relation to, to the COVID environment, so I just want investors to know that even during some of the toughest environments that we're in, that Gatekeeper is a well-run organization that isn't burning cash needlessly. And we're coming into this environment where there's more Fed money being allocated to, to two of the core markets that we are in, over 100 billion, so we are investing in our business and getting prepared, for that money allocation, right? And we're starting to see some of it fall off the back of the truck now, so I just think that Gatekeeper is a unique, company, maybe one of a handful in the microcap space, and we've got enormous growth potential, and we're seeing it in the sales funnel, and now it needs to transition to that income statement, which we're in the process of executing on.
Well, Doug, listen, I mean, we've been we've known you guys for a number of years. You've come a long way since we first started discussions a couple of years ago. You guys, even though you've had a bit of a downtick as far as this quarter, your revenue trends seem to be going the right direction, and I'm sure will continue once the pandemic's over. Listen, if anybody wants more information, what's your website address and what's the best way to contact you for more information?
Anybody wanting more information can contact me directly at my email address, which is on the site, or I'll give it to you here. It's ddyment@gatekeeper-systems.com, or our email address or our website address is gatekeeper-systems.com. www.gatekeeper-systems.com.
Perfect.
And all the financials, let's see, we're 156, so financials should have been updated and released at 1:30 on the website.
Perfect. Yeah. So definitely, if anybody's interested in those financials, you can check CDOR, check the press releases, and I'm sure we'll have posted it in the forum here once they're there. Doug, as always, it's always great to catch up. Good to see that you're all healthy and keeping busy. So always like to thank you. Thank you when you come on by and spend some time with us. So thanks again, and look forward to catching up with you guys pretty soon here.
Okay, very good. Thanks, Paul. Thanks, Trevor.